Should I invest in commercial or residential property, and what are the differences? That's what you're going to learn in this video. I'm Ed, an economist here at Opes Partners, and this is Property Down. If you head on to Trade Me, you might find a commercial property like this. It is 96 square metres. It's in Mount Wellington in Auckland. It's got a wee kitchenette on the bottom and a couple of offices upstairs. Now, there are three main types of commercial properties. You've got industrial, which are things like warehouses. These tend to be a bit more expensive. You've got retail property, where you're just renting out to a store. And then you've got offices like this one we're looking at today. Now, there are other types too, but I'm showing you this one because it's cheap. Asking price only about $600,000. And that's why some people will genuinely say, well, why don't I buy something like this instead of investing in residential? What could you get for $600K somewhere else in the country? Well, you might get something like this 2-bedroom townhouse. Asking price $550K, 2 bedrooms, 1.5 bathrooms. So let's compare these two. How much money would you need to buy each of these? You need about a 30 to 40% deposit for a commercial property. It depends on what the bank actually needs, but let's call it 35% for this commercial building. That means you'll need a deposit of about $110,000 to get started. Let's compare that to the residential property. Because it's a new build, you'll only need about a 20% deposit, which means you need about $110K to get started. So in this example, you'll need almost an extra $100,000 to buy a commercial property compared to the residential. But now let's talk about how much money you could actually make from both of these. Commercial properties tend to get higher rental yields. Looking at similar properties online, you might be lucky to get about a 6% rental yield on this commercial property, which means you've got annual rent of about $36,000. But the costs you have to pay are different. So with a commercial building, you'll typically pay a higher interest rate. Let's call it 9%. And on top of that, you're going to need to pay principal and interest. Best case scenario, you're probably looking at 15 years to pay that off, which means your mortgage payment is quite high, about $47,000. But there is good news. When you're investing in commercial property, your tenant will usually take care of rates, insurance, maintenance, all those things, so you don't actually have to pay it. What does that mean? This property would have about a negative cash flow of $11,500 a year, so you'd have to top it up by about $220 a week. Some of that, though, is going to be going to paying down some of your debt. Let's take a closer look at residential. In that case, you will likely have a lower rental yield. So let's call it 4.7%, which means you take it home about $26,000 in rent a year rather than $36,000 with the commercial property. But we also have different costs. You're probably going to get a lower interest rate because it's residential as opposed to commercial. Most investors will also go interest only, and so your mortgage payment might be $17,000 or $16,500 less for residential compared to commercial. But then you've got to pay rates, insurance, maintenance, as opposed to your tenant taking care of that. So you've got some of those extra costs all up. You'd expect it to be not too dissimilar. The residential property, you'd have to top up by about $195 a week compared to $220 for your commercial property. Though, of course, you've got to remember with commercial, you're paying down some of the debt as well. So that's the cash flow side, not that dissimilar. But let's talk about how these properties go up in value. Residential properties are bought and sold really quickly. There's a big market for it. So the price that you pay and how quickly the value of your property goes up is really about what's going on in the market. And sometimes it's going to be up, sometimes it's going to be down, but generally the trend is up and to the right. Maybe your property will go up by an average of 5% a year. Commercial is a bit different. Properties are valued based on the rent and a capitalisation rate, also known as a cap rate. So you might look at this property and it's not rented at the moment, but let's say it did have a tenant and they were paying $35,000 a year. Now, if you were renting to a stable New Zealand company, and let's call it Latte Larry's, maybe they've got a 3-year lease. Now, what return would you expect from that property? You might say 6%. Well, 6% is then your cap rate. So if you expect a 6% yield based on 35 grand of rent, that means that that property is worth about $583,000 to you. Now, there are two ways for your commercial property to go up in value. You either need to raise the rent, and it might go up by, say, 4% a year, or you can decrease the cap rate. You see, the lower the cap rate, the higher the price. Now, the cap rate is impacted by what's going on in the market, the quality of your tenant, and how long your tenant is locked in for. So I'll take you through an example. What if you had an empty building like the one we're looking at, or you had a less desirable tenant, maybe somebody with less money like Mocha Joe's, a competing coffee bean company? Well, you might think, well, what happens when that tenant leaves? Or their company might fall over, they're not as financially stable. Well, I won't have any rent. In that case, you are going to want a higher return because you are taking on more risk. That impacts the cap rate. So let's say Mocha Joe's is only on a 1-year term. They're not a very financially stable company. I need a 7% yield, a 7% cap rate. So the value of the property is now $500,000, even though the annual rent is the same. Now let's say that both Latte Larry's and Mocha Joe's are importing their coffee beans, and it's through the New Zealand Customs Service. What if you were able to rent your commercial property to the government? Well, government departments, they tend to have long leases and they have lots of money, so they're probably always going to pay their rent. So you might say, that's a stable tenant, they're definitely going to pay the rent. I am willing to accept a lower yield, and so that's a lower cap rate. Let's call it 5%. And so even though the rent is the same, $35,000 a year, the value of the property has gone up to $700,000. It's the same property, the same rent, different tenant, different value of the property. So the value of your commercial building is probably going to jump around a bit more compared to residential, which tends to go up in value fairly consistently. And the reason is, it's all about who your tenant is and how long they're locked in for. And if you like learning about property in this really numbers-focused way, make sure you hit the subscribe button. We release new videos every Monday and Wednesday. And if you do already subscribe, you'll know, as well as these returns, we've got to talk about the risks. The biggest risk with a commercial building like this is your tenants. What if you can't get a tenant? Well, with residential, it's actually pretty easy. There are lots of tenants looking for properties all of the times. In the Waikato region in August 2023, there were a massive 772 properties rented, taken off Trade Me in that single month, and only 650 listings got put on. On top of that, on average, it took 18 days to find a tenant. Not that long at all. With commercial, it's harder. There aren't as many businesses looking for commercial space at any one time. So commercial buildings, and I think we all know this, they can be empty for a really long period. We all know sometimes we'll walk down the street and there might be a shop that's been empty for a really long time. You see, those commercial returns we talked about before, they look really good. But what if you end up having to pay a big principal and interest mortgage at 9% interest when you don't have a tenant for, say, a year or two? And that is the reality for some commercial property investors. Look at this one in Hamilton. It's retail and it was listed. They started looking for a tenant in November 2020. Over 2 years later, they are still looking. That's going to be really hard for the investor if they've got a big mortgage. So commercial property can be a really good investment when times are good, but it can also be a really bad investment when times are bad. And if you're looking to make an informed investment decision, visit us at opespartners.co.nz. We help regular Kiwis grow their wealth through new build investment properties.